Good morning, everyone. It is Wednesday, April the 15th, and welcome to 7Investing Live. This is our show that we host every Monday, Wednesday, and Friday at 10 a.m. Eastern Time to put a spotlight on several of the stock market's most intriguing opportunities. A reminder that if you actually want to see our actual stock recommendations and our monthly best buys, you can always get started at 7investing.com/subscribe, where your first 7 days are absolutely free with no strings attached. My name is Simon Erickson. I'm the founder and CEO of 7Investing, joined by our video producer, Heather Horton. Today, we're going to be doing something kind of special. We just started doing our watch list review last month. We looked at some really cool companies that we added to the watch list in February. We're going to do the same thing for the 2 new companies we added to the watch list here in March. And again, our watch list is our pipeline of new ideas that are not yet official 7Investing recommendations, but there's something interesting going on with them that has drawn our attention. We're going to put a little bit more focus on those 2 companies here today, which are Bloom Energy, number 1, and 2, Lumentum. Heather, I'm kind of pumped up about this. We got some big news about one of them that just happened yesterday, but these are 2 new companies that are heavily involved in the data center. We've been talking a lot about AI data centers, 2 new neat technologies that are playing right into that trend today.
I'm super excited to learn all about Bloom Energy. After we talked about it last week, I looked into a teeny bit, but then I was like, nope, going to hold off till our deep dive and learn about it with our viewers.
Absolutely. And if you have questions for us, please post them to the chat, or you can always follow up on our YouTube channel. You can follow up on our LinkedIn or Twitter channels as well. But let's jump into Bloom. This is an interesting one. You know, Heather, you and I have talked about one of the biggest bottlenecks with this breakneck speed of AI data center construction right now is power. They just consume a lot of power, and there's not always a lot of power that's available. In fact, some of the largest data centers that are being discussed by Meta Platforms or by XAI are going to consume upwards of 5 gigawatts of power consumption. To put that into reference, the largest nuclear power plant available and operational right now in the United States is a little more than 4 gigawatts. So this would be an entire nuclear power plant at the largest scale we have that would be dedicated to just one facility being run by one company right now. This is absolutely massive in scale. There's not enough power that's available to do all of this. And so Bloom Energy is kind of one of these unique technologies that has got the right tech in the right place at the right time. They're providing solid oxide fuel cells, which are modular in size and are easily providing on-demand power. What that means is a fuel cell actually creates an electricity stream out of a feedstock of natural gas or hydrogen, but it doesn't give off combustion, which means there's not emissions that are produced in the reaction. It is separating out the electron stream that is then being used by the data center, recombining it into high purity carbon dioxide, which is then it's offloading to its partner through an agreement for them to sell and use in the food and beverage industry. And so perhaps we can show first the technology that Bloom Energy has. It's a little easier to see this in a picture or a graphic than it is for me just to discuss it. But you can kind of see here's how the fuel technology is providing electric power at scale for Bloom Energy. There you can see the alternative fuels or the natural gas feedstock on the left, along with ambient air. You're putting it in between the anode and the cathode, and then the electrolyte, which is where the electrons are actually flowing within the fuel cell itself, gives off very high efficiency electricity, a captured high concentration carbon dioxide stream, and then high temperature air that's emitted as well. But the neat thing about this too is that they are modular. Look at the bottom part of this graphic. You're able to see the video of this. You can make a single fuel cell in just a smaller power module, perhaps a couple dozen kilowatts, or you could scale these up to several megawatts or even gigawatt size if you wanted to use it for industrial power purposes or something like a data center. And this is where it's really interesting for the companies that are building out these massive data centers is you don't have to go out and build a nuclear power plant. That requires a lot of permitting. You don't have to pull it from the grid, which is pushing the prices up for everybody else if you got more demand on that. You can now have behind the meter or on-demand power specifically available, and you can size it depending on how large you want the systems to be. Really, really neat. I think this is a great application. And because Bloom is one of these technologies that, you have the capital costs associated with the manufacturing of this technology, that will scale over time. The beauty is when you start selling more and more of these fuel cell modules in larger and larger contracts, you're capturing the economies of scales, you're pushing your margins up higher too. So now that we understand the technology side of it, let's look at the other graphic that we have here for Bloom, which shows the operating efficiency of this, how the margins scale over time. Look at the non-GAAP operating expenses as a percentage of overall revenue, and how that has declined from 26%, about a steady state. This wasn't all that exciting of a technology. It was still exciting, but it wasn't getting the same bang for its buck as it was getting here recently. Now that you're seeing these absolutely massive contracts kick in and the economies of scale is pushing down the operating expenses as a percentage of sale, I only expect it to be 15% in 2026. And we have lower operating expenses as a percentage of overall sales. Your operating profit margins increase as well. And you can see that on the right side of the graph, the operating income that is increasing significantly. One more deal that I would like to highlight before we kind of discuss a little bit more about Bloom is the recent deal that they just signed with Oracle. This happened 2 days ago. In fact, anyone who was watching Bloom Energy's stock price yesterday on April the 14th saw that it was up 23% on this news. And the news and the press announcement was that Oracle and Bloom Energy are going to expand their existing strategic partnership to be basically twice as large as it was before. Now up to 2.8 gigawatts of power production to accelerate their own AI infrastructure build out. And again, these are huge, right? The 2.8 gigawatts is a massive amount of power because Oracle is going to be building a massive amount of data centers to support their own internal needs as well as those of others. When you see one of your largest customers saying, hey, we want to double our existing master agreement that we have with you, understandably, the stock reacts in kind. And that was what the good news that we saw from Bloom Energy yesterday was. This is not just a data center play. In addition to having Oracle and Google as large customers, we also have got Walmart and Bank of America that are using Bloom Energy's energy systems as part of their own internal operations. It tends to be large customers that are buying these systems in large modular quantities that are really moving the bar for this company. And so even though the company last year only reported 29% gross margin, 4% operating margin, and a negative 4% net margin, it's kind of that hockey stick inflection point that's going to push this into be a really, really good investment. And that's why you saw the stock reporting really good press release yesterday and reacting in kind when the stock price was up 24%. So that's Bloom Energy. Let me open it up. Heather, I know that you have said several times you've got a real interest in this one, kind of a neat technology and a neat company at the right place.
It's so interesting. Back to, so the the CO2 that it produced, the carbon dioxide, they sell it to beverage companies. Is that just going into sodas?
They have got an agreement with a industrial gas manufacturer that is capturing that. And so typically, if you have a combustion reaction, you've got low purity CO2, about 5 to 6% of the outlet gas is CO2. You got to spend a lot of money to kind of purify that and condense it. But the stream that's produced from a fuel cell technology is about 50% carbon dioxide. That's much easier to clean up, and then you can use carbon dioxide wherever you need it. But food and beverage is one of the main reasons for this. Anytime you buy Coca-Cola and you've got bottled CO2 that's in there, it's a perfect fit for an industrial application.
It's very funny to think that our Coca-Cola is powered by data center power. And the really cool thing about this is that it's up and going now. This isn't an idea or something like small nuclear reactors are small modular nuclear reactors are, yes, they exist, but it's kind of still an idea that is being worked out. And that's something I find really, really interesting about this is like this full on exists. You can just buy this right now. Is there anything to be watching out for with Bloom? Any red flags? What are the concerns about this? Any?
They do have a massive amount of backlog. I think that the last number that I saw was the backlog is $20 billion before the Oracle agreement. And we don't know pricing or just how large that is. I think it's fair to assume that's probably a $2 billion plus agreement with Oracle. So call it a $22 billion backlog. Keep in mind how they did about $2 billion in total revenue last year. So you've got a backlog that's more than 10x your annual sales. It's kind of like you've got a decade's worth of current capacity already on the books, which is really exciting. But I think to answer your question is there is a little bit of they do need to raise capital a lot. They are diluting shareholders from equity raises or convertible debt because they've got to spend money to increase their capacity. You never want to see a company that's diluting you as a shareholder, but I think it's okay in this instance since you're putting into capex to increase your capacity to fulfill all the backlog that you've got. They do pay significant amounts of stock-based compensation, and they do have an agreement with Brookfield Asset Management for a lot of the infrastructure deployments that they're doing. They're not just buying it directly from Bloom, you're buying it through kind of an intermediary that's supplying a lot of the other infrastructure for larger projects. There's some kind of internal transactions that are related to those. This is why I put on the watch list first rather than directly on the scorecard. I'd like to do a little bit more pencil sharpening to kind of see what's going on behind the scenes in the financial statements. But I think that, the strongest statement I can say is that power supply is still one of the biggest bottlenecks in this AI infrastructure boom. And you've got a really good technology to address that that's modular and is scaling up very.
Yeah, it's a very interesting one, and I'm excited to see what comes of your deep dive into the sometimes less exciting part, but you enjoy that.
Absolutely. So the first one's Bloom Energy BE. If you want to follow along with that one, that is traded there on the New York Stock Exchange. If you want to follow along more with them. The second one is Lumentum. This is also another neat technology that's finding its way into data center applications. To set the tone on this, it's very what they're doing is we talked about co-packaged optics a couple of shows ago. And basically what is happening is within data centers, you're sending a lot of information back and forth within the data center. And traditionally that was being done over copper wires, electrical signals being sent over copper wires. But we realized several decades ago that if you actually convert an electrical signal into an optical signal, you can transfer that much more efficiently without the losses. And it's just a lower power consumption and a clearer data signal. And in fact, in the late 1990s, America as a whole spent almost $1 trillion on laying fiber optic cable to be the backbone of high-speed internet. You were going from dial-up connections and modems and DSLs, and then all of a sudden you've got the fiber that's being laid all across the country. It cost a ton of money, but it made sense to get the world connected with internet, and it's transferring internet signals versus fiber optics. Same thing is happening within the data center itself. When we talked with Robert Quinn on this show a couple of weeks ago, he pointed out that now the east-west traffic within a data center is 5 times greater than the north-south traffic going into a data center. Now, that doesn't actually mean exactly what I'm saying. It's not the traffic that's going from the east to the west in terms of the map, but what that means, east-west traffic, is the data that is contained within the networking of the data center itself is 5 times larger than the data that's going in or out of the data center. A simple example of what that means is if you ask Amazon Alexa, which I don't want to be triggering in my room right now, but a question about what is the temperature outside. You've got to convert now my voice into a signal that's understood by a processor who's got to fetch the information based on my zip code and it's the temperature of what it is, convert that back into a voice signal, and then send that out to the data center. There's a lot of computing that's going on within the data center itself. There's a lot of networking that's going on in the data center itself. In fact, 5 times as much of the networking traffic is going on within the data center itself. So how do you do that as efficiently as possible? Well, you do the same thing that the telecom industry did back in the 1990s. You start converting electrical signals that are given off by a processor, convert them into fiber optics, send that in parallel across the data center, and then send it out as efficiently as possible. By the way, this technology blows my mind when you think about all that is happening in a fraction of a second for who to respond to your inquiries. And so Lumentum is actually providing the lasers, the transceivers and receivers that are converting electrical signals into optical. And there's a lot of technology that's very niche to do this, but it was NVIDIA, the king of parallel computing, that developed at a large scale the GPUs and made them so popular in the data center. It said, yeah, this is really, really neat. We want to have all this code running in parallel. How can you do this at scale? Lumentum, we really appreciate your technologies. And so let's put up the Lumentum chart, if we could, to kind of take a look at how they kind of show the engines that are driving Lumentum's growth. They've got a couple different things that they're working on. Oh, there's one other graphic. Hopefully, I'll get to that one in a minute too there. But we've got the cloud transceivers. Those are the ones that are transferring electrical signals into optical signals, where then they're also pushing that up into scale and larger systems that are much, much larger than they were before. Let's look at the other graphic now, which is in tandem to this one. Thanks very much, Heather. I'm kind of putting you on the spot here. But you look at the EML laser shipments that Lumentum is providing. EML is electro absorption modulating lasers. What that means is it's converting the signals, electroabsorptions. The material is able to absorb the frequencies of the laser, of the optical signal, and then modulating them using a higher frequency to actually transmit them throughout the data center itself. And look at this. This is the bread and butter. This is the core hardware that's required for these. You see an 8x expansion, plus 700% in laser shipments between fiscal 2023 and fiscal 2025. That's really good when you see that kind of demand. But then on top of that, you're going to have another 50% increase in their core technology of their lasers here within 2026. This is something that is really, really highly in demand. And it was NVIDIA that recognized the potential of this. In addition to not only making Lumentum a preferred supplier in partnership with the build-outs that it was doing for these large data centers, it also signed a multi-year strategic alliance with Lumentum and has also invested $2 billion in the company to basically ramp up their capacity to make sure that they're getting exactly the products they need to keep up with the demand that they're seeing. There's a lot going on with that. I think that the moral for this story is the same one that we just saw when we talked about Bloom Energy, which is Jensen, who's kind of, and NVIDIA is a company that Lumentum is piggybacking on this one. Jensen thinks there's going to be $4 trillion a year spent on AI data centers by the year 2030. And if that's even directionally correct, Lumentum again, doing less than $2 billion in annual revenue today. I mean, that's another hockey stick. That's another inflection point. You can kind of see a 10x increase in the spending that's going to go to AI data centers. A company like this with a neat technology that's being bought into by the largest company in the world by market cap. It's really a good place to be for a company like Lumentum. And that's why I joined the watch list here in the most recent month for 7Investing. It
was ill-timed coffee. Once again, if anyone has any questions, please drop them in the chat wherever you're watching. We can get to them. With Lumentum, we do have a full episode that's more of a deep dive, that fiber optic boom to bust, and I'll link that into the description of this episode as well. With Lumentum, NVIDIA's picked up on the technology. Do they have exclusivity with NVIDIA, or are they working with Broadcom or other companies?
I'm not aware of it being exclusive. In fact, we talked about Applied Optoelectronics was another company that was kind of piggyback on them. It's in the alliance, but I don't believe I've seen anywhere that it has to be this company that's providing the transceivers.
Okay, and Lumentum can work with other large chip makers.
Correct. Cool. Yep.
Mm-hmm. And then, what are the red flag concerns with Lumentum?
And I think this is the right time to address the valuation, right? Because both of these stocks have skyrocketed in recent years. Both Bloom Energy with the announcement with Oracle here recently, just this last week, but Lumentum is up something like 600 or 700% in 2026 alone, right? Or in the last 12 months at least. I mean, at some point, you've got to be mindful of the valuation and say, okay, how much of this is expectation that if you hit a bump in the road, are we going to have another correction from that where they didn't scale up as quickly as they did? And I will actually stay bullish on these companies. I still think both of these companies are still buys today, even with the rearview mirror showing you that they've both gone up in price significantly because the demand has changed. The overall business has changed. The market has changed from where they were even a year ago. And if you've got a solid commitment with orders to back it up, and you're basically cranking out as many of these products as you can at your own capacity and you're increasing capacity, you should be getting a premium to where you were before. So I think that's my disclaimer of saying, don't get scared off by past performance or feel like you totally missed the boat. If it frightens you with seeing how much they've run up, maybe this isn't something you go and you back the truck up. But I do think that the market is always forward looking. In this case, the forward-looking demand supports the run-up in the stocks here recently. Still a risk, though. It's something we need to be mindful of.
Past performance can be it's not a predictor of the future performance, but it can be a good indicator. And winners keep on winning. So
they do. Yep.
Sometimes even it hurts to get in on a stock after you've missed such a rise emotionally, but if you can get over that mental hurdle, they can be some of your best stocks.
And you think about it too, even NVIDIA at one time was a company that was doing $2 billion in revenue, right? And had a neat technology that all of a sudden you're not just using GPUs for gaming, you're using them now for AI training, and then AI inference. And all of a sudden it's the most valuable company in the S&P 500 today. I'm not suggesting either Lumentum or Bloom Energy is poised to be S&P #1, but you can just kind of see that, sometimes if you find neat things like this with markets that are just all over them, they can gain a lot of momentum and grow very, very quickly in a short amount of time.
So even if they have already grown a lot, it's not, they still have runway.
Exactly. So Bloom Energy and Lumentum, again, Bloom is a BE, Lumentum LITE, if you want to follow along with both of those. Heather, you can actually follow along with our own watch list. That is within the 7Investing subscription. We talk a little bit about here publicly if you want a deeper dive into both of these, including some of the stuff that I found behind the scenes on the financials, some of the stuff related to Lumentum's technology, whatever it might be. Every single month, we add 2 new companies to the watch list. I'd encourage you to check out 7investing.com at the link that Heather's got on the screen there right now. Again, your first 7 days are absolutely free. You get to see everything. You get to see all the stock picks, all the watch list picks, everything that's included in 7Investing. Absolutely free, no strings attached for your first 7 days. But in the meantime, we will continue talking about cool technologies that we're excited about here. I am moving. I've closed on my home, so apologies for the kind of makeshift setup in the background. We'll have a more permanent background in office here for you soon. But I'm always excited to talk about what's going on the watch list and those 2 new companies that we've added here today. So we'll be back again on Monday of next week. In the meantime, I hope you have a wonderful week this week and a wonderful weekend as well. We'll see you again on Monday.